Hello traders, and welcome back to my channel. Today, I'm excited to share a trading strategy with you that's both simple and incredibly profitable. In fact, it's so powerful that once you master it, you won't need any other strategies. But don't be fooled by its simplicity. This strategy packs a punch and has the potential to bring in significant profits. In this video, I'm going to take you through every detail of this strategy, step by step. So, make sure you watch till the end, because this could be the game-changing strategy you've been searching for. Now, let's get started. First, we'll head over to TradingView.com and select the GBP-JPY currency pair. I'll set my time frame to 5 minutes, but remember that this strategy can be used on all time frames and still be profitable. So, get ready to take notes and let's dive into this powerful trading strategy. Okay, now that we have our chart set up, it's time to add some indicators to help us make informed trades. We're going to start with the stochastic heat map by Violent. Don't worry if you've never heard of it before, I'll explain everything step by step. So, first things first, go to the indicators menu and search for stochastic heat map by Violent. Once you've found it, apply it to your chart. Now, let's tweak the settings to make sure we're getting the most accurate signals possible. Change the moving average from EMA to WMA, and choose theme 1 for a clean and easy to read display. Next, adjust the increment from 10 to 8, the smooth fast length from 2 to 7, and the smooth slow length from 21 to 26. Finally, change the plot number from 28 to 25. Okay, now, we need to make a few adjustments to the style of the indicator. Don't worry, it's really simple. You'll see a bunch of plots, but we only need to change 2 of them. Scroll all the way down until you see the colors for the K line and the D line. Before I explain what those are, let's change the color of the K line to something easier to see. Let's make it orange. And to make it even more visible, let's increase the thickness a bit. Now, do the same thing for the last plot, so we can see it better too. And there you have it, your stochastic heat map is all set up and ready to use. But before we move on to the next indicator, let me give you a quick overview of what this one actually does, so you can better understand how it will help you make more profitable trades. So here, we're plotting stochastic oscillators into a heat map to help us identify overbought and oversold regions. The green lines indicate overbought regions, while the red lines indicate oversold regions. I'll explain how to use this heat map, but first, let's add a second indicator to the chart. Head to the indicator step and search for pivot point super trend by Lonesome. Add it to the chart. By the way, if you're interested in executing trades with zero spreads, check out the link in the comments section below. Now, let's customize the indicator by changing the pivot point period from 2 to 3, lowering the ATR factor to 2.8, and changing the ATR period from 10 to 8. This indicator also has the option to show support and resistance levels, but I won't be using that feature in this video. Instead, I'll be showing you another support and resistance indicator that's one of my personal favorites. So, be sure to stick around. And this indicator we just added is a powerful tool that provides us with highly accurate buy and sell signals. As you can see here, we caught a huge upward movement in the market using this indicator. We can use it to spot trend reversals, and to confirm these signals, we'll be looking at the stochastic oscillator map. When we are in a red zone, indicating an oversold condition, we'll wait for the K line to cross the D line to confirm a potential trend reversal. Once we get a buy signal from the pivot point super trend indicator, we'll enter a long position. As a result, we could have potentially made up to 46% on this move alone without using leverage. If you apply leverage, such as 10x, we could have made more than 460%. So, this is a great strategy that can lead to substantial profits if executed properly. Using the stochastic oscillator and pivot point super trend indicators is great, but we need a way to determine when to exit a trade. That's where the volume SR indicator comes in. Go to the indicator tab and search for volume SR by Tomy. Let's move on to setting up our support and resistance zones using the volume SR indicator. This is an amazing tool that helps us identify key levels of support and resistance. First, add the indicator to your chart and go to the settings. You'll notice that this is a multi-time frame indicator, which means it will show support and resistance zones from different time frames on your chart. For this strategy, we'll be using 3 time frames, but feel free to adjust it based on your preference. Starting with the first time frame, change the volume MA threshold from 6 to 8 and the number of zones back from 30 to 33. Also, change the color of the resistance and support lines to the same color, like yellow, so it's easy to distinguish. For the second time frame, we'll double the time frame we're using. For example, if we're trading on the 4-hour chart, we'll use the 8-hour as the second time frame. Set the volume MA threshold to 8 and the number of zones back to 33, just like the first time frame. Also, make sure to use the same color for the resistance and support lines. For the third time frame, we'll use the daily chart. Again, use the same setup as the other zones by setting the volume MA threshold to 8, the number of zones back to 33, and choosing the same color for resistance and support lines. Once you've set up all 3 time frames, click OK. Now, you have a solid support and resistance zone set up to help you make more informed trading decisions. Let's take a look at how we can use these 3 indicators to build a profitable strategy. First, we have the stochastic oscillator, which gives us accurate buy and sell signals. When we see a crossover from the K line over the D line in an oversold region, that confirms a buy signal. Second, we have the pivot point super trend indicator, which also helps us identify potential trend reversals. And finally, we have the volume-based support and resistance zones by Tomy, which helps us draw support and resistance zones on our chart. To use the volume-based support and resistance zones indicator, we want to look for areas of the chart where there are overlapping zones of support and resistance. These areas indicate high liquidity and can be used as exit levels. Let's take the SPY signal as an example. We can see that there is a support zone in this area, which would be a good first exit point. We can also see a rejection of the price and some support in this area, so we'll draw another zone here as a second exit point. To make this strategy even better, we can add another interesting indicator at the end, which I'll show you later. But for now, with these 3 indicators and our support and resistance zones, we can build a solid trading strategy. Remember to always hide the indicator after you finish drawing your exit targets to avoid cluttering your chart. Now I'm going to test this strategy on the Euro-USD currency pair. I will take 100 trades and I will calculate the accuracy and gain of this strategy. Great news! The results of our test are in and they're truly amazing. Over the course of 31 days using a 1-to-1 and 1-to-2 risk to reward ratio on the Euro to US dollar currency pair with a 5-minute time frame, we were able to find 100 trade signals. Out of those trades, we had 83 winners and only 17 losses, resulting in a win rate of 83%. This is an excellent win rate, especially considering our risk to reward ratio. During the test, our most successful winning streak was 9 trades in a row, and we only lost 2 trades in a row at the most. The gain on the account was an impressive 124%, with a 2% risk per trade. That means if you had a $1,000 account, you could earn a profit of at least $1,240 using this strategy on one currency pair alone. The beauty of this strategy is that you only need to risk 2% on each trade, making it very profitable even with only 20 trades. In fact, with a 1:1 risk to reward ratio, you can expect at least 15 profitable trades. Just remember not to risk more than 2% per trade. Additionally, you can use this strategy on multiple currency pairs to increase your potential profits. So don't hesitate to try it out. Let me show you one last indicator that can be helpful in confirming your trades. If you go to the Indicators tab and type in Breakout Probability Expo, you'll find a powerful tool that's also an editor's pick. Add it to your chart, go to the settings and change the percentage of step to 1.2 and the number of lines to 4. Then disable the Show Statistic panel and click OK. This indicator is designed to predict the direction of the next candle based on the previous candle, giving you an idea of the likelihood of the price going up or down. To use it, switch to a higher time frame like the daily chart and check the probability of the price moving in your intended direction. For example, if you want to take a long position, check the probability of the price going up. As you can see here, the probability of the price going up is much higher than going down, which provides further confirmation for our long position. By now, you might have noticed that this indicator is best suited for rating on larger time frames. However, you can also use it on smaller time frames like 5 or 15 minutes. To do so, you need to make some adjustments in the volume indicator settings. For the second time frame, we will double the time frame we are currently using. For instance, if we are trading on a 5-minute chart, we will use the 15-minute chart as our second time frame. For the third time frame, we will use the 30-minute chart. And for the fourth time frame, we will use the 1-hour chart. These settings will allow us to trade on lower time frames while still using the indicator. It's important to note that when trading on lower time frames, you need to keep your stop loss small to manage your risk. Additionally, the spread can also impact your trades and result in your stop loss being hit. Therefore, it is crucial to choose a zero spread broker such as IC Markets. With a zero spread broker, you can maximize the potential of every trade, particularly when scalping. By eliminating the impact of the spread, you can focus on your trading strategy and enhance your profitability. Click the link in the description to join IC Markets and start trading with zero spread. If you found this video helpful, please like and subscribe to the channel for more trading tips. Best of luck on your trading journey, and we will see you in the next video.